Alrighty, guys, so we have the FOMC statement today, the press conference, Jerome Powell, the Q&A, all that good stuff, and we got news that the Fed funds rate is going to remain the same, at least for now, which is right around 5 to 5.25 right now, which means the rate hikes for now have stopped. And I was reading earlier, guys, this is nuts. I think we saw 15 months straight of rate hikes, which I don't think we have a meeting every month, but it's I think it was 10 meetings in a row of rate hikes, whether it was 0.75%, a quarter, 0.5%, right? So now we're at 5 to 5.25, and we're going to stay there, at least for now, guys, because from the data we got from the Federal Reserve today, they think interest rates could go to 5.6% before the year is over, indicating 2 more rate hikes if the Fed raises by quarter-point increments each time. And that's actually initially what caused the stock market to go down, and then we ended up rallying into close, but that is what caused the markets to go down. More rate hikes to come, even though we're pausing right now. We can see here, guys, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. Of course, some think probably more than 6%, some are under that, but a lot of them, nearly all, believe rates need to go higher.